You walked on down the hall. You came to a door. They looked inside. Euro, I want to sell you dollar. Anyways, hey, good day. I'm exhausted. My back is shot. Oh, so I think this might be a short webinar, but every time I say it's going to be a short webinar, it ends up being a long webinar. So let's just, it will be what it will be, and it will be gosh darn good considering the circumstances. So, good day. What is it, a Tuesday? I think it's a Tuesday. What part of the world are you in? Yeah, it's a Tuesday. Let me remind you that trading is risky, not appropriate for everyone. You should have been a dentist like your brother. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. I might be, and I get respect. Hi, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. I am here to guide you through our journey down the river of Forex. The secret is to float down the river like a cork. Swimming upstream is just too difficult. Greetings from South Africa. Or is it this way? Oh, wow, that doesn't look good. Is it that way or is it that way? I think we'll go that way. Greetings. How was the exam yesterday? It was. That's how it was. It was lots, 18 pages of questions. What do you think of this? What do you think of that? So anyways, so now I just have finishing up a paper on restructuring a corporation. In fact, I'm changing the corporate culture of their call center. And then I have an exam on Wednesday, and then I have a project on Thursday. So I think I'll be done by Friday. How nice is that? Cape Town is running out of water. What are you talking about? Cape Town is surrounded by water. You live in Cape Town, look out the window. There it is. Look for sharks. Water is nearby. Yeah. So, hey, I do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. The bottom line is I want you to succeed, even when I've been up all night, studying all day, examining for hours. It was a 3-hour exam. Three-hour exam. 3-hour exam. You have about, it's 100 questions, right? So in what, 180 minutes? So you don't have much time. Thought I would read like an example of what you have to do in a minute and a half. I have it? I don't know. We don't have to go into it. That's not the one I was going to do. Anyways, they're long, detailed, tough questions, but whatever. All right, so let's just dive into the charts. Oh my God, my back is shot. I've been sitting in this chair too long. Marina is Cape Town. They're going to change the name to Cape Marina. Marina. You park your super yacht in Marina. Yeah, my tailbone's fine. My lower back is shot. Anyways, that was a true story. You know lots about me. Okay. Aussie versus US dollar. Seems that US dollar is strong. Okay, that's Captain Obvious, right? The second thing is, where is it going? I gotta zoom in now. Okay, so you can see we have the counter trend set up and then the trend. And let's put it, I guess, in here. Okay, so those that are trading with the trend, this area between the 21.55 is your dynamic level of resistance. You can also see that we have resistance up in here, and we have the weekly sell zone. If you are a swing trader, your weekly sell zone is here. Okay, you have resistance here, 21 and 55 are here. Okay. You can see a lot going on this side if you happen to be a bear. The week opens at a bearish area, drops to support, up to the weekly pivot, down to the weekly target. So at this point, I don't know what else will happen this week. I know it's Tuesday, we're done, right? So you should already be able to tell me that there's a possibility that we retrace back to this area. But it doesn't have to. Like that, it doesn't have to do that. Very often it does, but it doesn't have to. Like, don't be so rules based that you trade it blindly, right? In this case, this is a bear zone at resistance. Okay, lower low, lower high, off the pivot, off the central, right down into here. If you had traded that, it is now done. Oh, okay, it's done. On the other side, we were trying to figure out if you were going to counter trend it, what would it do? And you can see, obviously, a higher high, higher low would be very beneficial to a bull, or at least believable. Okay. Any questions? Morning, RJ. Can you guys see this as a swing trade? And then you can see that there's a cluster going on here. There's a target here on a monthly basis. There's a target here on a weekly basis, target here on a weekly basis. So anything in here is fine. Okay? But let me ask you something. And maybe it's Captain Obvious, but maybe it's important to our brain. Is it possible you were a bear on this on Saturday? The markets were closed. But is it possible that you could have looked at this pair and said, you know what, I'm a bear. I've done my long-term fundamental and technical analysis, and I can't go any further than that. But I'm a bear. Hassan says no. Okay? Is it possible you were a bear on Friday? I can tell you the swing trading group met on Friday. And to me, if you're doing a weekly swing, if you're a bear, okay, this whole area was pretty obvious. And if you're a bull, this place is pretty obvious. And that's the interesting thing. If you were just a bear, that's what your trade plan would have been. And if you were just a bull, you would have had that. Okay. The interesting thing is, the second these markets open, you could have been a bear in here. But really, if you look at it, okay, Friday, okay, now this is the whole non-farm payroll stuff. Clouds it a little bit. But there are opportunities, or were opportunities. Okay, it's certainly Monday, right? Can you see this? How, like, for me, a Sunday afternoon, you could say, "Oh, well, this worked out real nice." If you were a bear, right? And if you were a bull, it dropped, but it dropped over the course of like 16 hours into a bullish zone. And it was buyable, and you might have even, felt good about it for a little bit. Okay. We'll take a look at USD Kitty Cat. We were trapped in there for quite some time, right? What was it, 2 weeks ago? Okay. So now what do we do? Hey, Hassan, keep the language polite, all right? You're in my office. Oh, yeah. Well, I only have to say it once, right? Cool. Something like that is what I would do if I were me. Okay. You should also identify the next levels where you'll be challenged. It seems pretty reasonable to me. Well, in many cases, guys, I don't like you waiting for the event to happen and then trying to jump in after it's happened as the market's freaking out or whatever the market seems to do. I mean, the market freaks out because they're freak out type people, and we're not freak out type people, right? So I'd rather you say, okay, Trump is, there's an announcement, whatever it is. There's a news event coming up tomorrow or something, or later in the day. So let's say there's New York news, but what do you do in London? Ideally, you get the price you want to get, and you simply tell yourself that you will take that price if you feel confident you can get your stop to break even before that event. Okay? You see what I mean? I'd rather you be in and set at break even than wait until after the news. Because by waiting for after the news, you probably missed whatever happened, and you'll not get the price you want. So you won't get the price, and you'll have this weird volatility issue. I'd rather you get the price and get knocked out than wait for the volatility and then not get your price. Does that make sense? So try to get the trade So let's say you're a bear. I want you to sell it at resistance like 12 hours before the event. And then before the event happens, move your stop to break even. Now, if you're not certain you'll be able to get your stop to break even in those 12 hours, then don't take the trade. Okay? So it's not that you're avoiding the event, you're making your decisions ahead of time. And that way you have this level of control. And honestly, what you'll see over the long run, in most news situations, most, not all, but more than many, like most, the market ends up doing what the market was going to do anyways. Let's just hear Hassan. Okay, euro dollar falling like a ton of bricks. We're through this old support level, or at least that one. Look where we are now. These are very important areas, right? So my spidey senses, yeah, my spidey senses are tingling. Here's our target, by the way, that I drew 2 weeks ago. How are we going to play this? Are we going to count that as hitting the target? There it is. Or are we going to play it as if we've hit our target? Nobody wants to answer? You guys are so funny. Might push lower. That doesn't sound confident. Is that the target, yes or no? Thank you. Gee whiz. I know, but it could fall further. I mean, you can't talk that way, guys. Let's say I gave you $1 million, and then we're having lunch talking about it, and you're like, oh. Well, it might fall further, but it might come back, and it may do this, and may do that. Like, dude, you don't give me a solid answer ever. Is euro dollar going up or is it going down? Well, it could really kind of go both ways. It might, but it could even fall further and then rise higher. But it might rise higher and then fall back. Like, dude, what are you going to do? Look, we hit the monthly target. Stop selling. Okay? But that's it, right? You should say, wow, we hit my monthly target. Imagine that, right? Now you meet with the client, $1 million, and I say to you, so what's going on? How's trading going? You're like, it's not even the middle of the month. We already captured our target. We've already hit our target for the month. Boom! So we're going to get super conservative now. Like, cool. You had a target? Okay. Do I look, got the crazy hair? Well, yeah, Jacques says, hey, so how do you pick a trade? First of all, so it's a good question. first of all, you should have a fundamental bias. If you don't have a fundamental bias, you're in trouble. It could, well, you know what? It could be a technical bias. It could be a fundamental bias. It could be a flip of a coin. You could simply wake up one morning and say, all I do is sell the pound. Why? Brexit. Okay, good. You made a decision. Okay? So however you get there, you've made a decision first. That is going to be the most important part of your trading. Because now you know if you're a seller at resistance or a buyer at support. Ask anyone here that's been trading for years and years and years. If you haven't made that decision, at best, your trading is going to be inconsistent. At worst, you won't be profitable. So you got all that. So you know if you're a buyer of the US dollar or a seller. So here's an interesting, funny situation. I'd like to sell the US dollar. Now things have changed over the last 3 weeks, really. 3 weeks ago, it seemed like we had predominantly better than expected news out of Europe, that the worst was over, that the ECB was going to have to back itself out of a monetary policy that was accommodative. Okay? And that's actually good for the US dollar. Okay? And it's also good for the euro in the sense that as an investor, you understand that there's some risk associated with Europe, but maybe the worst of the storm is over, right? You see that part there? Okay? So whatever. So what's the second part? Well, that's what technical analysis is. Is this market bullish or bearish? Well, how do you know? Well, that's what technical analysis is going to do. So a lagging indicator like 21 EMA is great. So what I teach is this is technically when the market became bearish. So I don't have an opinion. It's just bearish by definition. Okay? So what I teach people over the last 15 years is in a situation like this, it's down, 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 up, up, sell, down, 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 up, sell, right? That's what I've been teaching people for 15 years. Okay? That's based on lagging indicators. So this crossover wouldn't have occurred until you were about down here. But that's really, okay? Okay. Now, a leading indicator are pivot points. So this X I drew when we were here. Okay? Long time ago. And it tells me stop trading. Stop selling. Okay? You can see it's a zone, it's not a price. So our target was somewhere between 118 and 119. You should stop trading. We're at like 118.50-ish, right? It dropped to 65. I mean, we're kind of in the heart of the lion's den here. At some point, it says you should stop trading. And that's the part that requires discipline. Because nothing on this chart says to stop trading, right? So at the very least, if you're going to continue selling this, do it on small time frames. And as soon as you get a higher high, just stop. Just say, well, that's it. That's one more, right? You get that point? So we should have enough information here when you include pivot points to say, I need to go from aggressive to conservative or maybe even neutral. Okay? Look where we are, guys. There might be price action reasons that we should become conservative. Now you'll say, well, Wayne told me to do the same thing over here. Yeah, yeah, support. Of course, okay. Now this might be the opportunity you're looking for if you're a bull now. So now you're going to tiptoe in and start chipping away maybe. You might want to wait for the first higher high, higher low, but at some point as a bull, you're at your support. This whole 100 pip zone is your support, so you still got to be conservative about it. But at some point, you're going to want to be in a series of buying dips, right? You're buying like here, you're buying here. I don't like trailing stops. I've never liked the idea of it. To me, it seems like trailing stops are like training wheels to a child that doesn't know how to ride a bicycle. Right. So Hassan is saying, I never know when to exit, so I use trailing stops. Yeah. Yeah, that's why you should know when to exit, right? So instead of saying, well, I'm going to throw down a certain trailing stop, I'd rather you get better at using leading indicators to know where support and resistance is, right? And then the other one is, if you do get out early, do you get back into the trade later? Like, how do you use your technical analysis to get in there? So I would rather you learn how to make solid decisions than throw down a trailing stop. Very often it's for people that don't have plans anyway. So they, oh, you shorted euro dollar. Why? I don't really know. And then you say, well, what's your target, right? And they'll say, I'll hear things like, 116. And I'll look at my chart. I'll look at my chart. And I'm like, 116? How do you come up with that number? And you're just like, I don't know, 116 sounded good. It's 500 pips. So I would rather address the weakness in the skill than, right, than use the trailing stop. Okay? I would write that down. Like literally, I would write it down. The thing I'm going to work on for the next 3 months, maybe 6 months, maybe a year is risk management. Okay? I would write that down and say, on different time frames, using different tools, you're going to test different ways to manage your risk. Right? One easy way is use two accounts. Every time you make a trade, place a trade on each account, the same trade. One, use your trailing stop. Two, manage your risk actively, not passively. And see which one makes more money over the course of a year. Okay. I would address it like literally a flaw and say, good, roll up the sleeves, like I said yesterday, right? Roll up the sleeves, get to work and say, I need to work on my risk management because trailing stops are silly. Trailing stops are for people that can't make decisions, and most of the time they don't know how to make the decision. So therefore, that's something that you need to work on. Yeah. Cool. Noki, going up with oil. Is this a good place to buy? So look at the technical analysis. Let's say you were a buyer 5 weeks ago. So what you see now is still a buying opportunity, right? First of all, as a buyer, do you think it's reasonable to think that you would have taken profit here, considering I drew an X there days and days and days earlier? I mean, it's pretty reasonable to say that you would have taken profit here, right? So as a bear, as a bull, where do you re-enter? Well, you can see I've drawn a lot of analysis on this chart already. Can we call that old resistance? Yeah. And the reason I have this gray zone here is you connect them and you drag it across. This is very, 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 very basic price action. You've seen me do it 100 million times. So could a bull consider that a role reversal? Could a bull consider that as a buy zone? They would be actually quite excited to buy that, right? So for some of you guys, this probably seems very, very elementary. And to some people here, it may be enlightening. I don't know if you think this way yet. If you are buying off the 21 with the 5A cross, taking it up, hitting the target, taking profit, having it retrace, and then buy it back again. I don't know if you're thinking that way yet, but what's interesting is if you can keep your bias, you'll see that you'll get the better prices. Some people are buying here, selling here, buying here, selling there. And again, I find it overall on the long run, you become very inconsistent. So as a bull, what's the weekly swing? The weekly swing I'll do in red now. This area here, you're supposed to be buying. Okay. So if you were a bull, you should be in here, right? If you were my portfolio manager, where all you did as far as a trade, you live and breathe as a bull. You don't look at any other currencies. You can't sell. You're not interested in selling. You don't look to sell. It's impossible for you to sell. All you do all day, all night, all weekend, on vacation, is think about buying the USD Norway crowner or whatever it is, crown or crowner or whatever it is, right? It's all you think is a buy. Would you be able to anticipate this? Monday morning, the market opens up on a roll reversal in a weekly swing buy zone. Would you be able to buy that? Would you be ready to buy that? You are the world's foremost expert on this pair, and you only buy. Yeah. But that's what a focus does, guys. That's what a bias is. You are the world's foremost expert as a bull on this pair. There's no way in hell you would miss that. It's clarity. Now, sometimes you end up doing things wrong because of that clarity, but you very quickly know you're wrong because you're so clear. You buy it and it falls, you're like, whoa, right? So, does your trading have that kind of clarity where you just simply cannot miss an opportunity because you are so unbelievably prepared? Do you have that level of clarity in your trading? Right? Getting there is a good answer. So here we are, Friday and Monday, right? It's very nice. So now what do you do if you're a bear? Yeah. As a bear, it's not as clean. Okay. You might have thought about this yesterday at London Open, and it didn't work out. You might try again, but it's less good. Okay. You could consider it here, couldn't you? But I wouldn't be so confident about it. I would probably be on smaller time frames, and I would look for a move like this on a smaller time frame, and I would only anticipate a move back to here. Okay. And if that's the case, so look, based on where we are now, this is a downtrend, right? The reason I have this here is it's anticipating a downtrend, right? Down, 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 up, up, sell, down, 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 up. And as a bear, that's what you'd be looking for. That's why I drew that. We're trying to judge if it does fall, how fast is it falling? Well, now we have to do this, right? Is that a bearish downtrend? That's something you feel confident in? You're like, wow, look at that downtrend. No, so what is it to you now if you're a bear? How do you qualify this setup? Yeah, if anything, it's neutral, right? So if you're a bear, you should be cautiously bearish, but essentially neutral. And do you see why a bull would probably cut through that? We don't know if they will, but if you're a bear and you're neutral, you'd think the bulls would get through this like a hot knife through butter, and you're the butter. And just one last little review. If you're using pivots and the market opens out, out of position is what I call it. You're supposed to ride the moving averages up to the target, and you should expect the target to be hit fairly early. Just a quick recap of that. All right. So the dollar's strong, and it's strong across the board. Now, Jacques also asked, how do you get into a trade? Well, first of all, you should have a bias. Then the second thing is relative strength. So I organize this where the USD is on the denominator for the pairs at the top, and it's in the numerator on the trades that are bottom. Okay. So everything on the bottom should be going the same direction and the same pace. Everything at the top should be going at the same direction and the same pace. Now, if they're not, then there's something different regarding that individual pair, because it's all dollar. Okay, so bottom three are going up and the top three are going down. The dollar is strong. Great. But what if one of these hasn't moved as much as the other? Well, first of all, double check all your time frames. 4 hour, 1 hour, 1 hour, 1 hour. So this has to be changed to 1 hour. Okay. All right. Do you agree that all three of these seem to be down? Okay. Now, take a look at the most recent candles. They're important. Okay. What about these three? Do they seem to be up about the same? No. So what have we learned? No, it's actually what you would expect in this scenario, but it's helpful information. What do we see here? What have we learned? Don't say divergence. It's not that it's odd, Mike, and it's not all yen. Charles Bender holding. Okay, so we'll go with Charles' answer. Charles says Swissy and yen holding their own. So what does that mean? Well, dollar stronger than Kiwi, dollar stronger than Euro, dollar stronger than Aussie, dollar stronger than Loonie, dollar's not stronger than yen, dollar's not stronger than Swissy. So dollar, Swissy, and yen are all strong. Okay? Indicating risk off. Ellsworth says, nice conclusion. Thank you. It's called relative strength. So 15 years ago, maybe even longer than that, before I opened my charts, because when I traded Forex in the beginning, you had a trading platform and then you had a charting package. They were not the same thing. Am I supposed to say mutually exclusive? They were mutually exclusive. Anyways, so you had a trading platform and charts. So I would open my trading platform first, and I would get overnight volatility data. Okay, and I would fill out a spreadsheet in Microsoft Excel. Okay, I'd capture the data, the overnight volatility data, and I would plot it into a chart. It took me quite some time, and then from that I could compare the dollar versus everything volatility-wise, the Swissy versus everything volatility-wise, the pound versus everything volatility. But I'm looking at like pound, dollar, pound, yen, pound, Swissy, pound, CAD, pound, Aussie, pound, Kiwi, right? So I'd look at pound versus everything, Aussie versus everything, Swissy, right? And I do this for all these G10 currencies. And I would fill out the sheet. And again, it wasn't based on price, it was based on volatility, which means how much did it move and in what direction? So you could get a number like negative 3.2759872. And another one might be positive 3.73, whatever. So I take all of this, I crunch them, everything versus everything. Basically, you know what, an index? I basically created indexes. But so I took all that information, it took me quite some time to manually fill this thing out. And from that, I could derive the strongest currencies relative to all other currencies, right? I could say this one's the strongest, this one's the second strongest, this is the third one, this one's, you know, slightly bullish, this one's neutral, neutral, slightly bearish, bearish, more bearish, the most bearish. And I would do all of this stuff, okay? Yeah, Carol says great stuff for that. Yeah, I did it manually before that. So if you don't understand the importance, right, you can rely too much on tools and never kind of get it. So anyways, I would spend all this time and I would do that. And then back then I had to calculate spreads because like pound dollar might have been 5 pips and pound yen might be 17 pips. And I would calculate my cost of doing business, my cost of trading. So what I would do is I would try to pair the strongest currency with the 2 or 3 most weak currencies, and then I would try to pair the second strongest currency with those weak currencies. Okay, and then so I'd have my target list of what I wanted to trade, and then I calculated my cost. You know, so if it was 27 pips to trade a currency pair, I would skip that one. Right? Because back then that's what it was like. And then, so I got it down to a situation where it would say pound yen short, pound Swissy short, Kiwi yen short, Kiwi Swissy short. That would be my plan for the day. And then guess what I would do next? I've written down what pairs I want to sell, and obviously because I know I'm selling them, what direction. What would the next step be after I did all these calculations? No, that's already done. I know I'm going to sell. I know what currency pairs I know that I want to sell. Determine entry, that's correct. I don't know what price I want to sell them, and I don't know what time I want to sell them. So what would I do then? Like, how do I determine the price and the time? I don't have that data on my trading platform, guys. My trading platform just had flashing colors. Sell, buy, sell, buy, sell, buy, sell, buy, sell, buy. I'd have to open my charts. Thank you, Emilio. So imagine this 15 years ago, and then contrast that with what you're doing now. I don't know what you're doing now, right? I don't know what you're doing now. Only you know what you're doing now. Are you opening up your charts and looking for trades? If that is the case, you're trading like it's a video game. You're treating it like a game. Especially those that are really shorter term, like really that want to focus on scalping only. Hey, I love scalping, but if you're only scalping only, it's like a video game. Oh, I made $27. I made $200 in 2 minutes. I'm so great, right? Candy Crush effects. You're not walking into the market a professional. A professional knows what they want to do before they've even looked at the chart. And I want you to get there, right? Okay. So now you're like, oh, charts. What's on a chart? Price and time. Cool. So, right now, we can, looking at this setup, we're not actually looking for a trade. We're doing analysis. Dollar strong, Swiss is strong, yen is strong. Cool. Do you want to buy those? Okay. Then you use your technical analysis. You discern whether it's a good opportunity to buy, right? So, do you want to buy, in this case, you know, we want to buy dollar and sell Aussie, right? Is this the price and the time that's good for selling Aussie dollar? Wow, that's weird. We just did our analysis. We did a relative strength exercise, and it said I should sell Aussie dollar. Why not sell Aussie dollar? Because the time and the price they don't seem good to you. You can get a better price. That's what technical analysis is for. So it doesn't give you any answers, because by the time it's happened, it's happened. So if you want to sell this, technical analysis says, well, you're probably better off looking for a scenario like this. Okay. You see that? Technical analysis. So I teach a technical analysis based swing strategy. I have a swing strategy based on technical analysis. Oops. And it says if you're a bear, you sell here. And this is your target. That's also helpful. That's what technical analysis is for. But it's not going to make decisions for you. Okay? Oh. Oh! Oh! Cool. Relative strength exercise. So we know the Swissy is strong. Kiwi seems to be weak. Euro seems to be weak. Aussie seems to be weak. CAD seems to be weak. Erdogan said today that the weakness in the Turkish lira had no fundamental basis. Like, oh, well, that's good then. That's really good. Is that spreadsheet in my book? I don't know. Honestly, I don't remember. But just imagine, just contrast, right? So what you do and what I did back then, I think are probably radically different. But do you need to do all that data? No. No. But you should have sort of the general behavioral attitudes, if you want to call it that, of if you find, and you really have to ask yourself, right? I mean, you really have to have a deep conversation with yourself. Do you open your charts and look for trades? Yes, sensei, right? I don't know the answer to that, and you're probably lying to yourself. And I don't know you. It's just everyone does it. Right? right? It's amazing when you look at the statistics of how many people think they're going to heaven, and then how many people think someone else is. I don't know. We think of ourselves very, very highly. I think if we didn't naturally think of ourselves highly, we'd throw ourselves off bridges or something. So we're very confident in ourselves, which is probably not always accurate, right? So anyways, it takes a while to really be able to talk to yourself and get the real true answers. And so make sure your behavior changes. And over time, the other things will change too. So maybe you should do something radical, behaviorally, not mentally or intellectually kind of thing. I would do something like open my charts on Saturday and plan all my trades for the week, and not allow myself any other opportunity to change. So if the market just freaks out and you're a dollar bear, but the dollar is bullish this week, so what? Right? Johnny Boy says, "Is this for spot trading?" Well, so let me I will tell you my technique for scalping, for example, is I start on high time frames. Okay, so I'll look at that and say I'm a scalper right there. Why am I a scalper up in that point? Because of that. Okay, and then I say to myself, I'm a bear. Done. I don't need the charts anymore. Okay, and I'm now set on scalping. Sell, 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 sell. Okay, right? You can see there's pretty easy setups here. But I have to have the reason first. Down, 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 up, up, sell, right? Consolidated breakout, great. Retrace. This tells me it's probably going to come up and maybe try to triple top or double top, depending on what it was. Yeah, interesting. Jacques, you're so funny. At 2% risk per trade, you're choking me up, dude. You risk 2% of your account on every trade? Yeah. What does that compound to? If you lose 10 trades in a row, what does that compound to? It's not 20%. No. But anyways. Yeah. No, it doesn't. I think you guys need to take a math class. Okay. For example, 5% a month, your account doubles at the end of the year. Anyways, yeah, 2%. If negative 2% is a bad month. So, anyways. Yeah. Well, if it's if it's 7, right? 7% is 10. 5% over 12, right? It ends up being the same thing. So you can do 7% a month for 10 months in a row and take the other 2 months off and you can double your account, or you can do 5% every month for 12 months and double your account, right? That kind of thing. But whatever, compounding works for you and against you, leverage works for and against you. So anyways, 2% is pretty high. Especially if you're an amateur. If you've been trading for 20 years, you can do whatever you want. You want to drop 10% of your portfolio into Apple? Hey, if you're the world's greatest portfolio manager, by all means, right? As long as it's part disclosed in your disclosure document. Yeah, John, I was talking about screens and stuff. I think my next rig, because I've had this now for a long time, right? It's getting old. I think what I'm going to do is 6 4K screens. But I contacted a company, whatever, that does these things. I'm like, yeah, I want 6 4K screens, and he basically said you can't do it without like a major custom rig. I'm like, why not? I don't get it. What's so big? Who cares, right? But I'd like to find a way. So I was thinking about like maybe 640s at 4K. John, come on, John. Well, why do I need bigger? Like 55s? I guess maybe because it's farther away or something. But I don't know. My desk now is roughly 10 feet wide. Yeah. Yeah, Mike, but I've done all of that. I've had a $5,000 computer that was crap. I've had $300 computers that work just as well. So I've been around. I've been through the paces. You know, what a lot of firms try to sell you is like, liquid cooled 55 core processors at 95,000 K with solid state. This, I'm like, dude, running MT4, it's not a drain on the processor. Every minute a pixel moves. I don't need 3D stuff. You know what I mean? Every second, one pixel goes. Like almost nothing happens to, as far as the computer is concerned. A pixel blips every so often. Like you don't need all this other ginormous stuff. So what I do need is a motherboard and a power supply. The motherboard needs to hold the video cards. The video cards can be cheap as far as I'm concerned. And we need a power supply to power them. And the rest, that's it, right? So anyway, so yeah, if I did another rig, I'd drop from 18 screens down to 6, but it would be the same amount of data. So my issue is my rig throws off a lot of heat. So I have dedicated air conditioning, and the room is air conditioned. So I have redundant air conditioning sources, and it's still too hot. Yeah, RJ says seems like a simple PC build. Well, but then you got to find the video card, or sorry, the motherboard, right? But in this case, you need 3 video cards running dual 4Ks. I don't know if it's that simple, but it shouldn't be too complicated either, right? Yeah, John's like, yeah, well, an inexpensive laptop with an HDMI port, and then you have a bunch of them. Yeah, but that's just it's just, I'm not looking to save money. There's, right? So 6 laptops. I mean, okay, you can do it that way. But there should be a better way. I'm just saying, when you go out and want something like that, just remind yourself what you need. Do you need super processing power? No. Do you need super fast hard drives or solid state? No, but you can get them. And solid state is better, but do you actually need it? No. Do you need, video cards that have a gig or 2 gigs of their own RAM? Not to manipulate 1 pixel per chart every few seconds, right? We don't need that kind of processing power, but we do need the screens. And if you want the resolution, so the problem is you want the 4K resolution, but they're going to give you 2 gigs per memory per video card, and your video cards are going to be $400 each. You're like, $400 each? I don't need $400. Yeah, it's just not necessary. I want the resolution, but I don't need 3D rendering and all this kind of stuff and liquid cooled processors. And so literally one time I had the $5,000 computer and it fries out on me. Okay, it just stops working. So I'm like, but I had literally, just in case there was a problem, I had a closet full of backup computers. So my computer dies. So I'm like, okay, I disconnect all the cables and throw it away. I throw it away. It weighed 150 pounds. But anyway, so I moved the main rig over. I go to my closet, and they've been sitting there for years. These PCs that I have just in case my PC blows up. Sure enough, it's there. And there were 3 computers, HPs about yay big. I think they were dual core computers that I paid $150 each for. Okay, and I could run 6 screens off each of them, right? So they were modified a bit, but they've just been sitting there for years in the box just in case. So I go to the closet, open up, click, 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 plug in all my screens, turn them on, and I ran that setup, I don't know, 3 years without any problems. So I ran 18 screens. I had 3 dual core HPs, and I connected them with a keyboard mouse switch. Worked totally fine. Spent $500 to run 18 screens. So I'm only suggesting you, before you go out and buy the $5,000 computer, just make sure you need what you buy. Well, they're fine. I don't care that they're HP. They could have been Dell. I don't even know what I'm running over there. But whatever. What do you need? Resolution. I'd rather spend money on quality monitors than a $5,000 rig that's got crap on it I don't need. I'd rather have very, very nice screens with super fast flicker rates and really, really thin bezels. Anyways. Yeah, well, John, but I need 6. I wouldn't do any less than 6. So I need 6, and that becomes a problem. 6 4K screens. That means I need 3 video cards. Okay, 3 video cards now is a problem typically for your average motherboard and then you need to plug in a power supply. I have like an 850 on this thing. I don't think it's enough. Anyways, what's DFO? Yeah. What's DFO? Oh, yeah. Sorry. You can definitely do 2 video cards. For 4K screens, who makes a uh, triple 4K out? Seems strange. Really? 2 triples? Yeah, I guess I haven't bought them in a long time. All right, so we're getting off topic, so why don't we just pull the plug? Um, yeah, I got to go restructure a call center. Well, this Jacques, so the 4K should get me the same amount as these, which are not 4K. So it'd be the same thing, Jacques. The thing is, I'm hoping less screens is less heat. Oh yeah, I guess 2 quads, but I don't think they make 4K quads, or at least I don't see them around. But so I'm just saying, don't go crazy. But I do remember the first day I had, I think it was 3 screens, and it was great because I wasn't sure if it was worth it, and I was the coolest kid in town. With 3 screens, people would just come into my office and they're like, "Holy crap! Look at those 3 screens." But I remember I was under the desk and I'm hooking in the cable and I'm hooking in the power and I'm thinking to myself, this is probably silly. Why do I need 3 screens, right? And then I crawl back out from under the desk, and on the new screen I just hooked up, I see a trade, and I went click, and I made enough money to pay for the screen, just like in the first few seconds, right? I'm like, damn, it was great. Hooked. Jacques, your trade plans and my trade plans. If you look at other people's trade plans, you should think about what you would do in this situation, what you agree with, and what you're not so sure about, and then let that author know. So peace on earth, may the pips be with you, may your profits be above average. Matrons, I think they went out of business though, the Vista. See, look at press releases 2014. Yeah, they went out of business, Vista. I have some Matrix cards laying around somewhere. So sorry today sucked, guys. I'm pretty sure it sucked. I'm just it's been a hard 24 hours. Ah, nice. Cool. What was it? I'm going to plan some sort of special event next month at TradersWay. I don't know what I should do, but I want to do something cool. So keep that in mind. Maybe give me some ideas. Oh, Ellsworth did learn a few things. It's cool. Answered a lot of questions. Yeah, cool. Well, that's why I guess that's why I'm here too. So I'm just worn out. I just feel worn out. But you give me the strength to get out of bed. So thank you for being in my life. I appreciate you in it. Thank you, Pradesh. Well, welcome to the family. Namaste. So I'll see you tomorrow. Bye-bye.